Look, the S&P and Nasdaq just flashed a bearish pattern that's frozen rallies before, and you absolutely need to know what this means for your money today. Here's the thing, it doesn't mean panic at all. PANW just crushed earnings, 31% revenue growth, stocks up 36% this month, which actually hands us a beautiful income setup right now. I'm walking you through exactly where to buy if this market flushes lower, and the safest play you can make while we sort this out. Look, the market just showed me something I can't ignore. We've hit 5,340 twice in 2 weeks, and twice we've rolled right over. That's a double top textbook rejection pattern. Here's what matters, volumes dropping while we're trying to push higher. When fewer people are buying but prices keep going up, that's smart money taking profits, not panic. Not a crash coming, but profit taking. I'm treating the next 2 to 4 weeks as a yellow flag. Statistically, these patterns resolve into pullbacks 65% of the time, so I'm not bearish, I'm just cautious. This is the setup where you trim winners and wait for the next entry point. Look, a double top is one of the most reliable reversal patterns I see. The market's basically saying I can't push higher twice, that's the tell. We've got our neckline sitting around 5,200. If price breaks below that on volume, the pattern's confirmed. Here's the thing, historical data shows these resolve into pullbacks about 65% of the time. And when they do, we're looking at a 2-4% dip. That doesn't sound like much, but it's exactly the reset the market needs after an 18% rally. Stay disciplined. This isn't panic, it's breathing room. Palo Alto just reported. Revenue crushed it, 31% growth year over year. Normally that's a rip higher day, right? Stock barely moved. Here's what I'm seeing, the real move already happened before earnings. 36% went down before the news dropped. By the time results hit, the easy money was gone. That's sell the news. Insiders saw it coming, bought early, now they're dumping into strength. And look, this is playing out across every mega cap name right now. That's what I'm focused on. Here's the thing about PANW right now. We're 2 to 5 days past earnings, that's the golden window. Roman 4 elevated, premiums are fat, and I like the setup. But here's my rule, I only sell a put on something I actually want to own. PANW at 160, so a 155 strike gives me 5% downside, 30 to 45 days out. That's the sweet spot for income without gamma eating my lunch. But I'm watching that double top first. If we're flushing, I'm buying, not selling puts. You with me? Look, here's how I'm thinking about entries right now. The S&P's first real support is 5,200. That's where I'm buying my first tranche. 1/3, that's it. If we crack that, 50,000 is where the algos step in heavy. I'll add another third there. I'm holding my powder for the third one because I don't know where this goes. For individual names like PANW, I'm looking at anything down 3 to 5% from recent highs. But honest, I won't touch it unless my conviction score is 6 or better. No chasing, no guessing. Here's the playbook I follow. 1, I take profits at 20% or more. 2, that cash goes to short-term bonds at 5, 2% risk-free. 3, I skip CSBs until Roman 4 spikes and market structure is stable. 4, I mark entry levels and wait. Patience beats prediction. 5, I check 5,200 weekly. If it breaks on volume, the pattern's confirmed and I nibble. That's it, no ego, no regrets. Simple system and it works. Look, the S&P and Nasdaq just printed a critical bearish pattern. And here's what I do, dial back aggressive longs, lean in income like cash secured puts instead. Speaking of income, PANW just crushed their earnings, 31% revenue growth, stock up 36% this month. That's an entry setup if you're patient with it, but I'm eyeing the dips, not chasing tops. The safe way through this, tranches at support levels. Come join us in Discord. Free community, we're breaking this down together right now. Discord, GG/R47RZGM.